Hello, everybody. Good day to you. Happy Wednesday to you. Greg Angello here with you on the Planet One. We're doing a little video podcast for you here today, and just to get yourself up to speed on some things that are going on and what we've just finished as far as podcasting is concerned, and going to have a little conversation about this credit score issue going on right now, and hopefully this will be able to I don't know I don't know if it's going to clear up anything for you or not, but there is a lot of conversation going on about this credit score issue. It's called the LLPA. It's called the loan level pricing adjustment. So we're going to talk a little bit about that, but we're going to take you to the podcast that I just finished yesterday. So I did a podcast with Stefani Boyd. Stephanie is a loan mortgage broker as well as a real estate broker, and she has been in real estate for very, very long time. I mean, even before the 2008 debacle of the mortgage industry and in the early 2000s. And she has been around. Her family's been in real estate a long, long time. So we had a really great conversation, not just so much about real estate in and of itself, but about her. And we've asked her to come back, and she has agreed. She's going to come back. We're going to talk a little bit more about first-time home buyers, and perhaps this LLPA will be in effect. Will probably be in effect probably by the time we get the next podcast done. But we're also going to talk about AI and artificial intelligence and that chat GBT thing that everybody's talking about. But before we get into all that crazy nonsense, I hope that you are doing really well. Weather-wise here, folks, we have been like in some sort of new climatic atmospheric change of something. I don't know what it is, but usually this time, the end of April, we're in the South here, right? I'm in the South Charlotte area. I'm about 30 miles from the South Carolina border. At this time of the year, I mean, we are really looking at high 70s, low 80s, and we're not seeing that. We're in the 60s right now. It's been kind of a crazy month. It hasn't really felt like normal weather temperatures right now. And so we can extrapolate that into the real estate market because it really doesn't feel like a normal real estate market. I think that's true on many, many different fronts. So we're going to talk a little bit about what is going on with this credit score issue, because there's a lot of misinformation out there right now. And I mean, I was listening to a report earlier, I think it was over the weekend or earlier in the week, that talked about how people with credit scores of 680 or higher were going to be charged, so much a month in fees. So we don't know. I don't know if that's exactly true or not. But the conversation that I had with Stephanie about it is that the LLPA, which is the loan level pricing adjustment, which is put out by Fannie Mae and Freddie Mac. So those mortgage agencies, they are the largest supplier of home-backed mortgage securities on the market for conforming loans, right? Think about conventional loans. And so they are the largest holdback securities of the mortgage product, the paper itself. So this was something that was done about 15 years ago. The LLPA has been around for a while, and I don't know if it's really talked about all that much, but now it's being revamped. And so it's going to be targeted in a number of ways, from what Stephanie was talking about it, and a little bit more information about what I have been reading about this level pricing adjustment on your loans. So, because we're dealing with a lot of different things now, that interest rates have increased. And, we weren't the ones that the real estate market, the real estate industry as a whole has been really sort of like holding on to almost everything that's been happening over the last 2.5 years, maybe 3 years. And I'm going to get a little maybe controversial here, but I think the government is really playing a role in our industry. I mean, look at what the Fed did in lowering down the interest rates as low as they did, to where almost anyone that was holding a mortgage that was under or at 3% or higher, and if you were able to get an interest rate below 3%, well, then you financed it. And you obviously saved money on your monthly mortgage payment going forward. So, but now that's changed, right? We don't have those historically low interest rates. as Stephanie pointed out in the podcast, the interest rates that we have right now, which is could be anywhere from 6 to 8%, depending upon your score and the mortgage program that you're going into. These are similar to what we had back in 1996 in that time frame. So it looks like there's a new matrix being developed to try to help individuals who have lower credit scores below 680, that they may be able to qualify for other loans that they were not able to qualify before because of their credit score. I don't know if it has to do with their payment history or what that is, but there are some programs that people who have lower credit scores cannot get into some other mortgage programs. It's how it is. And some mortgage companies have their own funding for their own programs, and you may have to have a 700 score or better to qualify for a certain loan. So it's almost like Freddie Mac and Fannie Mae. Some say they're trying to level the playing field. That's one conversation or thought about it. But there's also another thought about, well, why why me if I have a high credit score, if I have a good credit score, I worked really hard. I paid off a lot of debt. I paid off my school loans early. I made multiple payments ahead of time to offset my debt to income ratio, my DTI. And now my credit score was at 650. Now I have a great credit score at 700 or 720, or I feel really good. I feel proud of the fact that I've worked really hard to do that. And so now if I have a good credit score and I do apply for a mortgage, it seems like I may not be able to get the great rate that I once had, or that my neighbor or my friends had earlier, because they did really well and have great credit scores. So I don't know if it's really sort of like, a trickle down adjustment between those that do really well, have great credit scores, to those that don't. I'm not going to go there. You can make your own assessment about that, because I think there is some underlining thought of a redistribution of wealth. But the mortgage industry and the real estate industry are really having what I call, I don't know if it's growing pains. It's almost like we are in a fight ring right now, a fight prize ring in getting in a boxing match, to put it that way. It's like the real estate industry is having a battle right now with many different sectors, and the government really is one of them, because lowering the interest rates where so many people had refinanced, and our inventory is 25 to 30% lower than it was a year ago, when we had even a lower inventory than the previous year before that. But we have a lot of demand, but yet we don't have any inventory. Now we have buyers who don't want to pay these interest rates, so we have less inventory. And we have so many people who got a better deal, better mortgage rate, and they're like, well, why do I have to sell now? Why do I need to do that? Because, I mean, what's the point? If I'm holding a 3%, why should I go out and get an 8%? What's the point of doing that? So all of these things have a causal effect on the real estate market. But there's some people, no matter what the current conditions are, they're going to have to purchase. They could be relocating out of state for a job, and that's one of the reasons. Or they have outlived their home. Their home is maxed out. Their family is maxing out the size of their home, and they need a bigger home, and they will go ahead and get another purchase and go through that process. So starting on May 1, if it does happen, we're going to see this new implementation of this new LLPA matrix coming into effect, and how it's going to work out based on the 80-20 rule on all of that, and if it's going to actually help buyers who have lower credit scores. They may be able to get into programs that they weren't able to before. We're going to see how that all works out. But we're going to have a much deeper conversation with Stephanie, or anyone else, really. I'm going to have probably another a loan mortgage officer come in and talk about this subject, because there's a lot of unknowns, uncertainties about it. And we deal with the media. The media, some of it is coming out, as I said earlier, is talking about it's going to be fees charged because you have a higher credit score. Some people call that, we're being penalized for that. And so I don't know if that's really true. If you listen to the podcast that we just finished with Stefani that we put up yesterday, she goes through that. And because I kind of bring up that, that conversation about, well, is this really, a hit against those who have better credit scores? She basically doesn't believe that. And she talks about what the LLPA is about, and we'll have more information about it. So my podcast, the one that I have, the one that we just finished with Stefani, California Dreamin' on a Spring's Day with Stefani Boyd, is out there. It's on Spotify. You can hear it on Amazon Music. It is on Deezer. It's all over the place. And we'll be getting that on our YouTube channel as well. So that is really part of this little podcast here I wanted to talk to you about. And I'm starting to see some other things happening. There has been a group of people right now that we've been getting some phone calls from in our real estate industry talking about loan defaults. Okay. So there's a number of other things that are taking place, and we're really not sure if this LLPA trying to make a loan level pricing adjustment to try to bring more people into the buying market, if this is the right process to go through it. Because we're starting to see now that there has been a massive amount of inventory that was purchased over the last 2 years. We know that. We've seen, especially down here in our market, we're in a high demand market with what we call our institutional buyers. Our big hedge fund companies were buying a lot of properties, right? They were beating out traditional buyers for properties so they can have those as inventory, either to rent them or to put them back out on the market and resell them, do their updating and all of that and put it out there and make a profit. Well, when the interest rates go up like that, they bought them at very, very low interest rates because they're holding the notes. All of that inventory, they're holding all of that paper on those mortgages that have to get paid, right? And if you don't, what happens? Well, it's a default on the mortgage. So I believe what may happen, I don't know if this is true, but this is sort of like the underlying thought that's happening with these phone calls that some of us in the industry are getting, is that there is going to be some discussions about possible maybe loan defaults on a large scale. I don't know. Now, could this maybe bring back something that happened in 2008? I don't know. We did see obviously massive amount of property values, 50, 60, 70% in some cases, in their depreciated of their value. I don't know if we're actually going to see that because home prices right now are not really changing. There may be incentives for buyers from a seller and concessions, or from a lender to offset your closing cost or your interest rate on the buy down, or paying a certain amount up front, which will save you money over the course of your mortgage. But are we going to see massive amount of an escalator falling down in home prices? I don't know if we're going to see that. We did talk about it on another podcast, unless something, adversely affects our economy as a whole. But I think that there are many people right now who are trying to figure out, where the real estate market is going to go, because I do believe we're going through some sort of it's not a small shift like what we just went through in the last 6 months. I think we may be headed into something else if some things don't change. I mean, the government can go back and make the playing field with interest rates a lot better. They didn't have to do this to slow down our industry. But nobody says that. No one's forcing the government to hold back on helping home buyers, right? So I really believe that it would be more beneficial if there were loans that were available to those who aren't able to have a better credit score, to get the type of loan products without having to go through a loan adjustment for those that have good credit scores. I don't know why that is part of the equation of this new matrix. And that's why it's like, where's all the transparency on this? And hopefully we'll get that soon. So that's what I got for you. Appreciate you all. If you are a first-time home buyer and you need more information about what all of this is, how it's going to affect you, what do I need to do right now in this market? Should we wait? Should we not? If you don't have if you're going to purchase a property and hold a note on it, if you're not paying with cash, and you need a really, really good loan officer. Well, you need a mortgage loan officer regardless, but they are your best friend along with us in helping you through and getting you through all the steps. So I really encourage you to make the first step in that, to have a good consultation with a mortgage broker, mortgage loan officer, and one that or you can reach out to me and we can actually refer you to 2 or 3 that you can have a conversation with, because that is really the stepping stone, the foundation in your home purchase, is knowing what you can afford and what it's going to cost you before you go out there and try looking at homes that you may not be able to get into, or it may not be a program available for you to have. And that's what I have all for you here this morning. Or what time are you getting this? I don't know. All right. So we wish you all the best. Appreciate you. And we look forward to seeing you soon on the planet. Have a great day. And we'll talk to you all soon. Take care.